Can you imagine a currency that will become a part of the world financial system and be globally accepted by making a bold statement? Believe it or not, cryptocurrencies are doing such a thing with its ever-growing ecosystem. They influence people's lives and give them freedom with unmatched benefits that were never provided by any financial system. In recent years, they have gained a considerable market size, and it is believed that they will have a profound influence on finance in the future. Cryptocurrency is an essential part of getting benefits from the decentralized finance system, and the trend of using them is increasing day by day. Let's have a look at some major reasons that prove cryptocurrency is the next big thing. Number 1. Efficient and cheap. When you use the centralized finance system, which is controlled by a group of people, you'll be forced to pay a substantial amount of tax every time you access their financial services. The reason is because they require a lot of manpower and resources to complete a process or transaction. The transaction may look instantaneous and seamless, but behind the scenes, there are a lot of things involved, carrying out the whole process in a number of days. This makes using the centralized finance system more costly and inefficient. As opposed to this, the decentralized system that is based on cryptocurrencies overcomes all these issues, since all the functions are automatized and programmed, which takes little or no human resource initialization, making the service instant and available for a minor fee. The decentralized financial system also allows you to transfer money across the border in no time, and in significantly less time in comparison to the centralized financial system, where weeks in tax payments and conversion fees are required. There's one more reason which makes cryptocurrencies more convenient. If you transfer funds from one country to another, it takes a lot of time and almost a 30 to 40% tax on it. But the same thing can be done in a few seconds by using a decentralized financial system. In fact, you can safely borrow or lend money from a person that is miles away from your country without going through any paperwork. It's almost impossible to do the same using the traditional system. Number 2. Authority over money. Let's create a situation. You have traditional currency and are using a centralized financial system. Now you want to earn interest with your hard-earned money and increase it. You go to the bank, and after doing a lot of paperwork and verifications, you deposit your money over. By doing so, you are unaware of where your money is going, what it will be invested in, and what the total profit can be with your capital. Not only that, but you are only getting the interest that is decided by some people with ever-changing conditions. On the other hand, cryptocurrencies provide you complete authority over your assets that are invested, and you know exactly where your assets are being invested in and how much interest is being earned from there. The public ledger, where all the details of the transaction are saved, is available for everyone in order to keep it fraud-free. The reason for this is simply decentralized finance. Many of you may not be familiar with the term decentralized finance. For this, we will break the term into two. Most of the cryptocurrencies are decentralized, which means governments or departments do not operate them. They're driven by some predefined conditions which cannot be changed. In addition, their value is linked to the demand, which means when demand increases, their value increases according to the supply. On the other hand, finance includes services like transferring money from one person to another. This goes for loans, saving plans, insurance, and etc. The primary purpose of this is to help people grow their money and help others with the capital invested. Combining the two terms, decentralized and finance, it is defined as making the financial system unrestricted and transparent, which means no one will have authority over the system and its rules. The system will use decentralized money like cryptocurrencies. Decentralized finance automates the services while we make our exchanges. The entity that made the decentralized finance system predefines the rules and once it is launched, the creator does not have any control over them, essentially letting it run and do its thing. Number 3. More interest. Traditionally, people invest their savings in the bank or companies which are operated by centralized finance systems. The interest is very low because the banks and the companies use a lot of resources, which increase the costs for carrying out such processes. By investing interest over cryptocurrency and decentralized finance earns you more profit as the whole process is automated, and no man cost or labor costs are required. The cryptocurrency, which is also based on the demand-supply ratio, increases its value by itself, as compared to the centralized currency, which value is increased by the government's financial institutes, politicians, hedge funds, and the like. In centralized finance, the interest ratio, which affects millions of people, is decided behind the doors by a group of privileged people. In comparison, in cryptocurrency, the interest ratio is determined automatically depending on basic factors such as what is the current supply of a cryptocurrency and how much is its demand, which are controlled by the investors, people like you and me. Number 4. Privacy and security. When you transfer the money via centralized finance services, you also have to answer everything related to transferring the money. There's nothing hidden from the banks, and there's always the risk of a security breach, as many events have happened in the past. The data can fall into the wrong hands, which can cause the users and banks to face dire consequences. While transferring within the centralized financial system, the details can be changed or forged, but in comparison, transferring cryptocurrency, every detail related to it is transmitted via highly secured blockchains. This way, the transaction details and information can never be obtained for any unauthorized personnel, and you don't have to answer any questions while transferring your money. Understanding how cryptocurrencies work requires understanding blockchains. Just like how banks have their ledgers and accountants, cryptocurrencies have their blockchains. There is always a system which keeps a record of everything you do in the world. The same is the case with cryptocurrencies, as all transactions are recorded via a blockchain database. In the blockchain, all details which are related to an associated cryptocurrency are stored. For example, if you're sending $500 in Ethereum, it'll be recorded in the blockchain. You, as a sender, will have your personal address attached to the blockchain alongside the receiver's address. There are many blocks in a blockchain, and each of them are essentially linked with one another. This concept gives this database the name blockchain. If a new transaction happens, the miners, or those who add the transaction onto a blockchain, will store data in the block. Once the transaction is filled, the block is attached with the other blocks. This new block will have an encrypted key alongside the previous blocks, which will be required for any person who wants to access it. In this way, the chain is created. All the blockchain data is not stored on a single place, nor is it stored in a single server, and it is definitely not under the control of a single person or group of people. Rather, it is stored on several computers all over the world. In this way, it is almost impossible to change any form of blockchain data, making it secure and transparent to everyone. To put it simply, let's take an example. John wants to transfer 1 Bitcoin to his friend Laura. Let's see how the whole process will take place on the blockchain. John transfers Bitcoin to his friend Laura. Nodes, which contains transaction histories in the network, propagates and validates the transaction, making sure that John's wallet address has the money and Laura has a wallet address. The transaction is included in the next block that must be mined by miners, who again are those who add a transaction onto a blockchain. Calculations to identify the block, also known as hash, are done by miners. By solving the calculation and providing a proof of work, which is the algorithm used to prevent users from generating extra crypto coins, miners propagated the new block to the network. Blocks are attached once the result is verified. The transaction is done. Laura receives the confirmation. In order to keep the deal safe, smart contracts are used. Smart contracts are contracts that automatically execute based on the terms and agreements between two parties. This works as a middleman for the anonymous parties. Number 5. Accessibility. Being able to access your finances is much easier via cryptocurrency. When trying to make transactions with a centralized finance system, you must log in, verify your credentials, confirm the transaction, and make sure nothing goes wrong on either sides of the sender's end and receiver's end. For example, if a person wants to transfer money but doesn't have access to centralized financial services, and also doesn't have access to cryptocurrency financial services, which one is easier to get access to? Of course, it's crypto finance. This hypothetical person just needs a smartphone and a working internet connection to get started on cryptocurrencies, and he will be able to use the desired service. That is how cryptocurrency finance is and has been changing the world of finance since its inception. The two-click access allows any person to make transactions that would normally take days to complete through the centralized financial system. There are many things that happen behind the scenes in both systems, but the way that they are handled are vastly different. Globally, 2 billion people have access to the internet without having any right to use traditional exchange systems. Consequently, the cryptocurrency is empowering them by giving them all financial services with just a single touch. To conclude, as we have discussed, the main reason cryptocurrencies are considered the future of finance is that they provide borderless financial services that are instant and very cheap. Regarding safety, all transactions are encrypted and safe from third parties. And they are also empowering ordinary people to enter the financial system with a single click. Let us know what you think about cryptocurrency, and if you want, share what cryptocurrencies you're currently holding on to. Until next time.